Hello and welcome to Market Masters. Billionaire investor Mark Mobius, who's been focusing on emerging markets for over 4 decades. He's a bull on India. Mobius is closely following the tech market in India these days and believes there should be more equity offerings in the country, more IPOs and more listing of government enterprises. And this, according to him, will increase the market size and allow more capital flows to India as well. He's also authored several books on capital markets and the world economy. He's joining us today to talk about his latest book called The Book of Wealth, a young investor's guide to health and happiness. Mark, thank you so much. It's a pleasure to have you on CNBC-TV18.
Thank you. It's a pleasure being with you.
You know, Mark, you write about your own childhood, how you did not come from money or a family of academia either. Your father was a baker, mother a homemaker. You had your own childhood struggles. You never borrowed money because your father warned you against it. Did your own childhood and the learnings guide you as your journey, during your journey as an investor?
Very much so. I think, the teachings of both my mother and father helped a great deal in where I am today. First of all, the value of education was very, very important to them. And they believed that, a good education was something they wanted to give us children. And secondly, they said, never borrow, don't get in debt. And I think those two principles stayed with me and helped me a great deal throughout my career.
Mark, you've also tried to explain investors the true meaning of wealth. It's not about owning expensive cars or having a lot of money in your bank account. It's quite a holistic concept. How did you come to learn about this, and what would be your advice to people who are getting into stock market, wanting to earn quick money?
Well, one of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton, who I worked with for many, many years. And he was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as notepaper rather than buying a notepad. So he was very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. So I learned a lot from him regarding philosophy of life and the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me.
Right. Be frugal in your transactions. If I were to ask you the true meaning of wealth, what would that be, according to you?
I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
You've also drawn comparisons between Warren Buffett, the Oracle of Omaha, and Rakesh Jhunjhunwala to explain that wealth transcends monetary gains. To gain, you must sustain. Why is this important?
Yes, that's a very, very important lesson that we learn not only from Warren Buffett, but from other wealthy people. In other words, you've got to be able to continue to build your wealth and not necessarily spend it, but to build it so that you can leave it to others. And in order to do that, you've got to be frugal and you've got to be very careful in how you invest your wealth. In other words, you've got to invest in companies that are going to grow their assets rather than shrink their assets. So this is a very, very important element in investing.
Do you also end up seeing a lot of businessmen these days, a lot of investors who are going big on the stock market, not caring about their health? And do you feel that is something we need to really think about?
Definitely. I mean, that's one of the most important points I think I hope that the young people who read my book will get. It doesn't make any sense for you to be running after wealth, running after money, if you're not in good shape and if you ruin your health in the process. So you find that true all over the world. People are so hungry to get wealthy, they forget about their health and they forget that health is wealth.
Right. You also said that you are your biggest asset. What is the one investment that any investor must make in himself or herself? And what is that continued investment that they should be making?
Well, there are a number of things, but the first and foremost, as I mentioned, is education. In other words, even though you've been to the university, you should not stop learning. One of the things, again, I learned from people that I work with around the world who were successful is that they keep on learning. They keep an open mind. They keep on reading. They keep on learning from other people. That's number one. Keep on learning. Number two, maintain and grow your contacts. In other words, the people that you know are going to be able to educate you about life and about so many other subjects. So try to extend your network of friends around the world. And by the way, I emphasize around the world because you should not be restricted to only your own community or your own country, but you should have contacts all over the world because that will give you another aspect of education, which is so critical today. Because if you're going to find the best investments, you got to go global. You can't do it in only one country.
Right. You've also spoken about different financial instruments in your book. You've compared stocks to bonds. You've spoken about mutual funds. You've spoken about equities, the importance of gold, the importance of cash as well. What would be Mark Mobius's favorite instrument right now?
The favorite instrument is and always has been stocks. Stocks in good, growing companies with solid balance sheets. That is the very best investment you can make to begin with. But there are other good investments like gold. I believe people should have some physical gold. And of course, in order to be successful, you got to be diversified. So you shouldn't put all your eggs in one basket, so to speak. In other words, be diversified across different asset classes. It could be stocks. Of course, stocks would be number one and the best investment, but then bonds, real estate, gold. These are the kinds of ways you can diversify. But I would say 80 or 90% of your investments should be in stocks.
Right. 80 to 90% should be in stocks. What should be the right holding period in stocks according to you? There are people who want to earn a quick money, but if you want to be wealthy or enjoy the fruits of your investment in the long term, how long should you be with a particular stock in a market?
Well, it depends on the stock and the behavior of the earnings of the stock. Some stocks you can hold throughout your lifetime because they continue to grow, they continue to improve, they continue to adopt new technologies so that they can sustain themselves. But there's some stocks that you buy and you quickly find out that this stock is not going anywhere. The company is not doing well. There have been changes in the management. There have been changes in the industry, and you should sell. So there's no, I would say, no optimal time. On the average, 5 years is probably the horizon you should look at. In other words, when you're buying a stock, you should think about what can this stock do in the next 5 years. Usually people can't, and managements can't look beyond 5 years, but you can get a pretty good idea of where the company is going by looking at a 5-year time horizon. But that doesn't mean that you shouldn't sell it tomorrow if things change, or that you shouldn't keep it for the next 20 or 30 years if things continue to go well.
Right. Mark, you've also said in your book, and you've mentioned several instances of people who may not have received formal schooling or may not have been educated very well. They had humble backgrounds or maybe worked as a carpenter for that matter. But through wise investments, through patience, through frugality, they managed to earn a fortune over a 20 to 30-year period. So what does this really mean? And what's the lesson in all of this for people getting into the stock market right now?
A very important point. A lot of people think that, oh, I've got to have a college degree. I've got to go to a university. Or I've got to finish high school. All these things are not necessary if you are willing to learn. The books are available in the library. You can go to any library. Most countries in the world have libraries. And now with the internet, it opens the whole world of education to anyone who's willing to buy a cell phone or a small computer. So the education aspect is something that's very critical, and you must not think that it necessarily means a degree. A degree is just a piece of paper. It's what you have in your brain, what you've learned, and what you've practiced is the most important. I would say 50% or 60% of the people who have degrees normally don't go into the field in which they were educated. They go into something different. They could have done that without having the degree. So this is very important. Don't forget about the degrees and the paperwork. Think about what you're actually learning and how you're applying that learning to your life.
Right. You've also spoken and quoted someone to say that it's your attitude, not your aptitude, which decides your altitude. Is that very important in the current context?
Exactly. You see many people around the world that have a great education, formal education, have a great aptitude for a certain field, but they don't use it. They don't apply it. And therefore, they're not going to be successful. They don't have the right attitude. In other words, they don't have the attitude to be successful, the attitude to learn more, to keep an open mind, and to progress, to move forward. So that's why I say attitude is more important than aptitude.
Right. Now, speaking about the emotion portion, you've warned investors to avoid the emotion portion in the markets. Avoid a herd mentality. Stay calm. Be knowledgeable. Study the markets well. Study the stock well, and then decide your call. What would be your advice and context in the current environment in India and globally?
Well, in the book, I mentioned the term emotion is the potion. In other words, the markets are driven more by emotion than by intellect or by rationality. In fact, that's the case of our lives. If you look at your normal daily life, you find that so much of it is driven by emotion. When it comes to investing, you've got to be much more rational. You've got to observe emotion. In other words, understand emotion, understand the crowd behavior, and use that understanding to invest. But don't get involved yourself in the emotion of the market. And I remember John Templeton saying the best way to invest is to buy when others are selling, are despondently selling, emotionally selling, and to buy to buy when others are aggressively selling, and to sell when others are aggressively buying. So this is the kind of thing that you've got to recognize when you're looking at a market.
Right. Mark, coming back to the India scenario, there are, of course, a lot of things which affect the sentiment in the markets. And currently, there is a certain degree of volatility, a decline in the Sensex and Nifty that we've seen because of Indian elections. That is what several experts suggest. Do you think this volatility is indeed due to elections, or are there other factors at play? How should investors see this?
I think there's no question the elections are having an impact because people do look at the elections very carefully. Everyone is involved emotionally in one degree or another, and they tend to react emotionally in the market itself. So now there's an opportunity because if you can look at the emotion in the market and recognize that perhaps the emotion, the direction of the market driven by emotion is wrong, then you should do the opposite thing. In other words, if everyone's selling, maybe you should be buying and vice versa. Of course, based on the fundamentals, on the actual fundamentals of the companies in which you are investing. So, yes, I would say that for India now, probably the Indian elections are having a big impact on the emotion of the market.
Right. We've seen at least 47,000 crores offloaded by foreign institutional investors since the time the elections began in India in April. Approximately $6 billion have been offloaded, Mark. What, according to you, would be the reasons for this?
It's probably because the uncertainty arising from the election. A lot of investors, not only foreign investors, but investors anywhere in the world, including Indian investors, tend to hate uncertainty. They don't want it to be uncertain. And of course, as you mentioned, the outcome of the election is uncertain. You know, some people say that Modi will get a supermajority and that he'll be able to get more seats in Congress. Other people say no, he may not, and that creates uncertainty. So whenever there's uncertainty, people say, "Okay, I'm out of here. I'm going to wait until I find out what's really going to happen, and then I'll invest." So uncertainty is a big driver to this, and that's probably what's happening with foreign investors.
Right. Let me ask you about 2 to 3 scenarios. One is if the Prime Minister, the BJP, the NDA, they cross the 400 seats mark, as they have been suggesting and claiming that they will win big, they will win with record numbers. If they manage to do that, how do you see the markets reacting, and what will be the growth momentum and investment momentum and attitude towards India?
I think if they do that, the market will probably do well, probably move up, barring any other factor coming in. But I would say it would be good news for the market. And more importantly, it would be good for the economy because then the policy objectives of growth and the adoption of technology will be very important. One of the key aspects now for India will be its ability to attract foreign technological investments, semiconductors, software, etc. There's an incredible opportunity for India to become the center for technical innovation and technical manufacturing. And that will depend on the degree to which the Indian government is able to attract these large manufacturers from China, from Taiwan, from US, Japan, etc. And that, of course, depends on the degree of bureaucracy and restrictions that the Indian government imposes. And my reading is that the Modi government will probably try to make it more attractive and loosen up these restrictions, which will attract more foreign investors.
Right. What if the government, the BJP or the NDA, altogether get the same numbers as last year? They don't get the 400 seats as promised, but they end up around 350, 353. Just the same number as last year.
Probably the market will move sideways. You know, there won't be much excitement in the market. The market, as you know, has gone up quite a lot. So there probably could be a correction along the way. So that won't be as good news as if you had a better election result.
Right. And what if they end up with less than the number in 2019, somewhere between 250 to 300 seats? How does that impact the sentiment in the market and the growth trajectory and the attitude towards India?
Bad news. The market will probably not do very well. There'll be a lot of negative sentiment, unless, of course, unless the opposition parties, Congress comes in and say, look, we're going to adopt a market-oriented, technologically oriented administration, and we're going to adopt new technologies. We're going to digitize the economy, following Modi. Then you're going to get a different scenario. But initially, it won't be good news.
Right. As you've also said in your book, there are periods of uncertainty in history, and elections are, of course, a period of uncertainty. So how should investors see this? One thing is to gauge the sentiment, follow your instinct, be knowledgeable about what's happening. But if you're not able to gauge the situation well, what should an investor do at the moment in India, or ones who are looking at India right now?
I think the key thing is to look at the individual companies in which you're interested. The companies that have good earnings numbers, high return on capital, and so forth. And look at these companies and ask the question, how will a Modi administration getting stronger or weaker or staying the same affect this company? What will be the outcome? In many cases, you'll find there'll be no difference. The company will continue to operate. There'll be no big change in its operations, sales, so forth. And in that case, if the price goes down, it'd probably be a buying opportunity. So I think at that stage, in these periods of uncertainty, again, you have to move rationally. In other words, look at the individual companies and rationally assess what impact the political environment will have on this company.
Right. You have been a bull on India. You have said that you've been following tech stocks in India very closely. Recently, you told us that your top stocks were Tips, NetWeb, Vari. If I were to ask you right now, what would be your top picks in India? Any other companies or sectors that you're following closely? What would those be, Mark?
No big changes, but I can't tell you that because we may be in the process of buying. So, but no big changes.
All right, no big changes. Any large sectors that you would remain most bullish on in India, irrespective of the election outcome?
Companies that adopt technology. By the way, it doesn't mean that it is software companies or hardware, computer hardware companies, but I would say companies that adopt new technologies to improve their profitability. Those are the companies you want to focus on.
Right. My final set of questions, when it comes to India, irrespective of who is elected, what are some of the reforms that are needed, according to you, in India? Because we are trying to be an alternative to China. You've also said that in many ways you prefer India to China, but those capital flows are right now not coming to India. What are some of the reforms that we need to make sure that we attract those funds?
First and foremost, the paperwork and the approvals necessary to make investments into India have to be simplified and lightened so that companies can bring in capital with the guarantee that they'd be able to bring it out again in the future. That's very important. So agreements and terms and conditions have to be simplified in that respect. That's number one. Number two, it's very interesting that there is competition from the different states in India. Some states have different rules than other states. The degree to which the states can come together and agree on common rules regarding foreign investments would be quite beneficial for the country as a whole, because then companies could have multiple locations in the various states. Some of these companies are very big. They have to be in multiple places. They want to be in multiple places, take advantage of the opportunities for workforce ability. So I think this would be another important reform. So in other words, a more unified system between the states in India. So I would say those are the two things: simplification and unification.
All right. The US has slapped additional tariffs on China, almost 100%, not almost 100% on electric vehicles coming in from China, 25 to 50% on semiconductors, solar cells. How do you think this is going to really pan out for global markets? Because clearly there will be escalating tensions between US and China, and the trade wars could worsen.
Well, again, this is where India comes in, where India will benefit from these changes because suppliers, the supply chain challenge for American importers is getting more and more difficult, and they need to find new sources of supply. Where can they go? What other countries have a billion population, a workforce of a billion people? It's India. So Mexico is benefiting, by the way, a great deal, but I think India could benefit again, provided that the Indian government simplifies the investment process.
Right. My final question to you, Mark. It's been a wonderful conversation about your book, your journey, and about the Indian stock markets and their trajectory. But one thing, if you've picked up in your life, in your experiences, in your 40 to 50 decade career in investing in emerging markets, what would that be? If I would ask you to sum up in possibly 3 points and leave them as takeaways for our viewers, what would those be?
Number one, of course, health. Try to maintain health, exercise daily, eat healthily. That's number one. Number two, establish friendly contacts. Try to make as many friends as you can and try to make good, sincere friendships around you and around the world. And number three, be patient. Don't be in a rush. Don't worry about what's happening this hour or the next hour or the next day, next month, next year, but think long term. I think those are the three most important things.
Right. Thank you very much, Mark Mobius, for joining us to talk about your book and also explaining us the true meaning of wealth according to you and as per your experiences since childhood and as an emerging market investor as well. Thanks once again for being with us here on Market Masters.
Thank you.
With that, we come to the end of this special broadcast. Thank you for watching and goodbye.